Samachir Kalvi 12th Standard Accountancy Subject Chapter 9 Ratio Analysis. Illustration 5. From the following balance sheet of Pioneer Limited, calculate proprietary ratio. Before doing this illustration, a small introduction about proprietary ratio. I have explained about long-term solvency ratio in the previous video that I have already given in the description. And proprietary ratio are normally computed for evaluating long-term solvency of the business. Proprietary ratio gives the proportion of shareholders' funds to total assets. Proprietary ratio shows the extent to which the total assets have been financed by the shareholders' funds. It is calculated as shareholders funds divided by total assets. This formula is proprietary ratio formula is shareholders funds divided by total assets. Shareholders fund, also known as proprietor fund, are the funds contributed by the owners in a company. Then the proprietor ratio is expressed in the form of percentage, and such as shareholders contributed to 100% or the complete asset of the company is financed by shareholders, it implies that no external debt was required for financing the business. For example, ABC Limited Company has a shareholders funds of 3 lakhs, rupees 3 lakhs and total assets of rupees 5 lakhs. When expressed now apply the formula, that is shareholders funds divided by total assets. Shareholders funds or proprietor fund and divided by total assets. So the amount shareholders fund was 3 lakhs divided by the total assets 5 lakhs. So the answer will be 0.6. When expressed in the form of a percentage, it comes 60%. How? 0.6 into 100. So the answer will be 60%. It means 60% of funds of the business are financed by the proprietor. Remaining 40% is lended by the creditors. Okay. Now going to do illustration 5. So equity and liabilities. First one, shareholders funds. A, share capital, equity share capital, preference share capital, reserves and surplus. Then second one, non-current liabilities, long-term borrowings. Current liabilities, trade payables. So total 4 lakhs. So equity share capital amount 1 lakh, preference share capital 75,000, reserves and surplus 25,000, trade payables 2 lakhs. The total is 4 lakhs. Then asset side, non-current assets, fixed asset, non-current investments are 2,75,000 and 50,000 respectively. Then current assets, cash and cash equivalents 75,000. The total assets are 4 lakhs. Okay. Now apply the formula. Proprietary ratio is equal to shareholders funds divided by total assets. So shareholders funds include equity share capital plus preference share capital plus reserves and surplus. So calculate now shareholders fund. Equity share capital 1 lakh plus preference share capital 75,000 plus reserves and surplus 25,000. So the total is 2 lakhs. So shareholders funds is 2 lakhs divided by total assets. Total assets means including non-current assets as well as current assets. So the answer is 2,75,000 fixed asset plus 50,000, then 75,000. So the answer is 4 lakhs. Okay. So 2 lakhs divided by 4 lakhs. The answer is 0.5:1.